Okay. Hello, we are team number 4, and today we're going to present the topic of audit with my team, which is conformed by Sofia, Patricio, Verónica, Cecil, Walter, Adolfo, and me, Jocelyn. An audit is a review of a company's accounting, labor, and other procedures to ensure compliance with established requirements. It can be internal or external depending on whether it is performed by the company itself or by entity outside the company. The main objective of an audit is not to detect fraud, although this is often true to the case, but rather to review the company's protocol to identify potential errors and implement appropriate improvements. However, legal irregularities may be discovered during the audit.
Importance of audit. Its goal is to verify that the company's processes are being carried out correctly, as well as to ensure compliance with tax law. The general idea is to determine what is being done well and which technical aspect can be improved to achieve better administrative management. Internal auditing is an independent and objective process designed to add value to a company by analyzing and evaluating the effectiveness of its risk management, control, and governance process in order to understand the state of the business and make the right decisions at the right time. It's not only a control mechanism but also a strategic tool that provides multiple benefits to organization, such as optimization of operational process, regulatory compliance, strengthening of corporate governance, asset protection, and improved transparency and trust.
External external audit. Um, an external audit is an independent object examination of an organism's financial statements, a process performance by an external professional to ask an opinion on the reasonableness and accuracy of the finance information. Key aspects: independence, independencia. The external audit must be independent of audit organization. Objetividad. The auditor must be audit free of conflict of interest. Finance statement examination. Examen de estados financieros. The organization's financial statements, such as the balance sheet and income statement, are examined. Process evaluation. Evaluación de proceso. The organization process I intern control are assessed. Auditor opinion. Opinion del auditor. The auditor issues an opinion on the reasonableness and accuracy of the financial information.
Advantages: identify internal issues and suggest improvements. Help optimize process and ensure compliance. Allow follow-up on implement policies. Disadvantages: lack independence since they are company employees. May not have professional certification. Costly to maintain in small business. External auditors, apprentices, impartial and specialized, ensure compliance with accounting standards, GEEP, increases trust from inventors and third parties. Disadvantages: high financial cost. A negative report can harm the company reputation, require access to confidential information.
Audit Manager. An auditor is the person responsible for reviewing, examining, and evaluating the results of the administrative and financial management of a department or entity. These are two types of auditors who are responsible for carrying out all the functions previously mentioned. Internal auditor. Their job is to periodically review that the company's operations are carried out as established, ensuring they comply with all regulation, quality, and presentation. This is a direct employee of the business or entity. External auditor. An external auditor is responsible for examining the reliability of financial information and compliance with laws. They conduct a thorough analysis of the company's financial statement and management, seeking to identify irregularities or flaws that could jeopardize this information. This audit is typically conducted by a public body or by an audit firm that is not directly employed by the firm.
Then we have the stages of an audit. Audit planning. During this phase, auditors gather relevant information, set objectives, and develop an audit strategy to guide their work. It involves a careful assessment of the organization's operations risks and controls, ensuring that the audit is conducted efficiently and effectively. Conducting the audit. Once the planning phase is complete, auditors move on the execution phase, where they gather evidence, test internal controls, and perform substantive procedures to validate the accuracy of the financial statements. Audit reporting. The last phase of the audit process involves finalizing the audit report and communicating the findings to the organization's management and stakeholders.